She walked into luxury banks, dressed as a South African heiress, claiming her grandfather built Sun City, and they believed every word. By the time Maria Michaela was done, she'd conned banks out of £13 million, lived in London's most exclusive properties, and disappeared without a trace. This is how one woman became Britain's most prolific female fraudster. Chapter 1. The Heiress Who Never Was. The year was 2007, and Maria Michaela had perfected the art of deception. At just 31 years old, she had something most fraudsters never achieve: complete credibility. When she walked into the offices of chartered surveyors and mortgage brokers, she didn't just look the part, she embodied it. Michaela introduced herself as Joanne Peer, a name she'd carefully crafted for this performance. Her story was elaborate yet believable. She was the heiress to a £250 million South African fortune. Her grandfather, she claimed, had founded the legendary leisure complex Sun City. Her father was a wealthy diamond trader, and she was now in a bitter dispute with him over the family trust. But here's where her genius showed. She didn't just tell this story, she lived it. Every detail was meticulously planned, every interaction carefully choreographed. She spoke with the confidence of someone who had never worried about money. And when banks examined her applications, they saw exactly what she wanted: old money, family drama, and legitimate wealth. What they didn't see was the truth. Maria Michaela wasn't an heiress. She was from Deptford in East London. There was no family fortune, no grandfather who built Sun City, no diamond trading father, just a woman with extraordinary manipulation skills and an accomplice who would help her pull off one of Britain's most sophisticated mortgage frauds. The psychology behind her deception was brilliant. She understood that banks don't just lend money based on numbers, they lend based on trust, and nothing builds trust like a compelling backstory wrapped in wealth and legitimacy. Chapter 2. The Perfect Partner in Crime. Every great fraud needs an inside person, and Michaela found hers in Mary Jane Rathi, a 43-year-old chartered surveyor with an impeccable reputation. Rathi had worked at the prestigious firm Ashdown Lyons since 2003. Married to a Metropolitan Police officer, no less. She was exactly the kind of professional that banks trusted without question. And that's precisely what made her so dangerous. When Joanne Peer approached Ashdown Lyons in March 2007, requesting valuations on multiple high-end residential properties, it was Rathi who took the case. The story Michaela told was compelling. She needed to extract properties from the family trust due to problems with her father. Rathi, seeing an opportunity, didn't just provide honest valuations, she became an active participant. Here's how the scam worked. Michaela would identify ultra-prime properties in London's most exclusive neighborhoods, places where prices were difficult to verify. She'd submit offers well over market value, sometimes double what properties were worth. Then Rathi would provide fraudulent valuations to support these inflated prices, creating a paper trail that looked entirely legitimate. Take the property at Cheney Walk in Chelsea, for example. Rathi valued it at £6 million after refurbishment, with a rental value of £270,000 a year. An independent surveyor later assessed it at just £3 million, exactly half. But the banks trusted Rathi's credentials, her firm's reputation, and the official-looking paperwork she provided. For her services, Rathi received over £1 million in gifts, £900,000 in cash, a £143,000 Bentley Continental, and a £49,000 Range Rover Sport. These weren't registered in her name, but in her police officer husband's name, adding another layer of legitimacy. Chapter 3. The £13 million Blueprint. Between August 2007 and April 2008, Michaela executed the fraud with surgical precision. She approached HBOS, now part of Lloyds Banking Group, and secured 4 separate loans totaling £10.5 million for 8 properties across London. These weren't just any properties. These were addresses that screamed prestige: a riverside mansion in Cheney Walk, Chelsea, a flat in Cadogan Gardens, Belgravia, near Sloane Square, another property at Chester Mews, behind Buckingham Palace, plus additional properties in Docklands and Pimlico. Each application was supported by Rathi's false valuations, complete with fabricated corporate tenancy agreements. The properties were overvalued by millions, but the paper trail looked impeccable. The banks had no reason to suspect fraud, but Michaela didn't stop there. Around the same time, she approached the Royal Bank of Scotland under the same false identity, Joanne Peer. She told them she wanted to refinance assets from her family trust into her own name. RBS believed her story and agreed to lend £2.5 million. Then, as planned, Michaela defaulted on the mortgages. Banks were left holding properties worth far less than the loans issued. Michaela had secured £13 million and vanished with most of it. Chapter 4. The Second Act. Most fraudsters would have stopped there, but Michaela had tasted success, and she wanted more. Late in 2008, she approached RBS for a second time with a twist. She'd changed her alias from Joanne Peer to Zoe Fletcher. New name, same sophisticated story. She wanted to refinance properties, complete with documentation to prove legitimacy. There was just one problem. She met an employee who recognized her as Joanne Peer. The moment that bank employee connected the dots, everything began to unravel. RBS launched an internal investigation. They discovered the pattern of fraud, the multiple identities, the defaulted loan. Contacted authorities, and suddenly Maria Michaela went from predator to prey. But she had vanished. Chapter 5. The Hunt. City of London Police launched a full investigation. Detective Inspector Andy Fife led the case, describing Michaela as creating a web of deception that duped banks into handing over vast sums of money. They discovered the scope of her fraud, the false identities, the corrupt surveyor, the millions that had disappeared. Mary Jane Rathi was arrested first and eventually jailed for 6 years at the Old Bailey in July 2011 for 5 counts of fraud and concealing criminal property. Her police officer husband was charged but later cleared. Rathi's career, reputation and marriage all crumbled, but Maria Michaela remained at large. Police made an appeal on BBC's Crime Watch, one of Britain's most watched crime programs. Her face was broadcast to millions. Tips came in, but she stayed hidden. The investigation continued relentlessly, with officers following every lead. Then, in January 2012, they finally found her. She had been working at a mortgage broker in Blackheath, the very industry she'd defrauded. It was a brazen move, hiding in plain sight among the professionals she'd once manipulated. When police raided her flat, they discovered multiple disguises. Wigs, clothing, accessories, everything she needed to transform herself into different characters. It was evidence of a fraudster who had perfected reinvention. When arrested, Michaela burst into tears. The mask had finally slipped. Chapter 6. The Reckoning and the Gender Gap. In November 2012, Maria Michaela stood before Harrow Crown Court. She'd pleaded guilty to 8 counts of fraud, conspiracy to defraud, and conspiracy to launder proceeds of crime. The evidence was overwhelming. The judge sentenced her to 9 years in prison. Detective Inspector Fife stated she had become one of the, if not the, most prolific female fraudster the UK has ever seen. The title was significant for a revealing reason. Female fraudsters are extraordinarily rare. While women account for roughly 22% of prosecutions overall in the UK criminal justice system, they represent only about 25% of fraud cases. In white-collar crime specifically, men account for approximately 75% of all incidents. Why is this gender gap so pronounced? Research suggests several factors. Women historically have had less access to positions of power and trust within financial institutions, the very positions enabling large-scale fraud. They're also statistically less likely to take extreme risks that major fraud requires. Studies show women tend to be more risk-averse in criminal behavior, with higher arrest rates and lower earnings from crime compared to men. But Michaela shattered these patterns completely. She didn't need a corporate position or institutional access. She created her own system, exploited trust from outside, and operated with boldness typically associated with male fraudsters. She proved that given the right combination of charisma, planning, and a willing accomplice, gender barriers in crime could be broken just as surely as in legitimate business. Chapter 7: The Aftermath. The £13 million Michaela stole wasn't just numbers on a spreadsheet. It represented massive losses for financial institutions that ultimately get passed to customers through higher fees and stricter lending criteria. The properties were eventually repossessed, but banks had lent millions more than they were worth. Michaela was eventually released from prison, having paid back just a fraction, approximately £354,000. That's less than 3% of the £13 million she obtained. The rest remains unrecovered. Her case fundamentally changed how UK mortgage lenders approach high-value applications. Banks now conduct more rigorous checks on property valuations, especially when they significantly exceed market rates. Surveyors face stricter oversight. The Financial Conduct Authority has issued multiple guidance notes on mortgage fraud prevention, using cases like Michaela's as cautionary examples. Closing. The legacy. Maria Michaela's story reveals something profound about modern fraud. It's not always about hacking systems or manipulating spreadsheets. Sometimes the most effective tool is the oldest one, a convincing lie told by someone who looks the part. She exploited trust, the very foundation of the banking system. When someone walks into a bank with the right credentials, the right story, and the right professional support, institutions want to believe them. It's the ability to make people believe you're someone you're not, and to do it so convincingly that even major banks never see it coming until it's far too late.